Okay guys, welcome back to another session of the trading course. I hope you guys are going back to watch the videos, the previous ones recorded, and trying to understand them as much as you can. If you have any questions, if you obviously get into the Discord, I'll be able to explain them to you. This is a free course. I don't have no signals I'm selling. I don't have no courses I'm selling. I'm not charging anything. All I ask of you is that you spend some time watching the videos, especially if you're looking to make some money in the market. So the last video that we spoke about was on the bullish entries, and I showed you how to get some entries when you're in a bullish trend, right? With ICC, which is indication, corrections, and continuations, you're trying to buy the market or buy. When it comes to the bullish entries, you're trying to buy the minute you get to the level of where the previous high was, which gave you that indication. So, for example, don't forget this is the long position tool that is used to set up your buys, and that is the short position tool that is used for your sell setups. So that's the high, that's a low, that's a high, a higher low being formed. Then you see higher lows and higher highs being formed as an indication of the market's trying to be to be bullish. So this was the previous high. The previous high was broken, right? The higher low created that higher high. That higher high broke that previous high, which is indication that the market wants to go up, right? So it corrects itself, and then, like I said, you have to wait. You can wait for the market to get back to this level, and then you know that because at this level it went all the way from that level to that level, you can begin to enter the trade and look out for some buys to get you some profit. But what I'm going to do today as well, I'm going to try and explain it a little bit further. So if you get into the market, right, let's say, okay, let's use this one. Yeah, let's do this. On the bullish trend, we're going to be talking about bearish continuation today, but before we get into that, I just want to show you guys something. This is the indication, right? So indication. That is the indication. This is the correction, right? So let's put that down here. Correction. And the continuation will be, like I said, is also an indication. So the continuation will be from here to there. That will be the continuation. So let's put that here. I'm going to try and put arrows on them so it's quite clear for you guys. So this will be the continuation. This will be the correction. That will be the indication, right? So because it's a bullish trend, let's change the color as well. And then let's make this one black. So indication, correction, and then when it went above where the resistance and support level was, you just place your stop. You just place your stop loss down there. Sorry guys, what happened to this one? So yeah, let's try and make this one a little bit bigger. So I don't know what happened over there. Yeah, there we go. Okay, so the minute it goes above that level, you put your usually you're targeting the first high, right? And then obviously you can aim for like a 1:2, but then you're putting the stop loss just above the previous low. That is how you're looking to get into the trade, right? So we're going to consider the part that I spoke about. So like I said to you guys, this is the point where you're trying to get the entries. You're looking for the entries at this level, right? That is the level where you're looking to enter. As we continue with the course, I'm going to show you how you can actually enter the market quite quicker than it is right now. Because sometimes the correction does not necessarily come all the way to that level. Sometimes it's in the middle, like we spoke about in the previous video. Sometimes it's all the way at the bottom, but doesn't close below that low. So you have to understand at what point does the correction, completes itself. But then I'm going to explain that in some of the videos that we're going to do, and hope you pay attention to it. Let's get into the bearish corrections, and then I can briefly explain that as well. Yeah, when it comes to bearish corrections, like I said, anytime you're seeing higher lows and lower lows being formed, that is telling you that the market is trending bearish, right? Let's make that red. The market is trending bearish. So if this is our low, this is our high, sorry. This is going to be our low, right? Then this one becomes our higher low because it is higher than this low, but then it is low. Sorry, our lower high because it's higher than this low, but then it is also lower than this high. So this one becomes a lower high, right? This becomes a lower high, and this lower high created another low which is lower than that low, so that becomes a lower low. What am I doing? Yeah, there we go. So this becomes a lower low, right? And then it continues from there. So lower lows, lower highs being formed, right? Lower lows, lower highs being formed. Let's do that for the lower lows as well. So anytime you get into the market, you're seeing lower lows, lower highs being formed. That's an indication that the market is trending bearish, right? You need to understand that anytime the market is forming lower lows and lower highs, the lower highs are not being broken. It's only the lower lows that are being broken, right? That shows you that is what is bearish. So let's look at this level right now. This was our high, this was our low. And then when we got to this level, a lower high was formed, but a new lower low was formed, right? But that lower low, this lower low, it broke that low, right? And anytime any swing high or swing low is being broken, that's an indication of what the market wants to do. In this case, the market wants to trend downwards, right? So it broke that low. It gave us the indication. So that becomes our indication, right? This becomes our indication because it's telling us what the market wants to do right now. And then when it gave us our indication, remember the market doesn't go all the way without, coming back down, right? It doesn't just go all the way. No, it makes ups and downs. It goes highs and it comes back up. It goes low and all of that. So, lower lows being formed. That low broke that previous low, gave us the indication, right, of what the market wants to do. And then anytime an indication is formed, a correction would have to happen, right? And what I said about correction is almost like liquidity, where people have placed their orders all around this place, right? So what they do is that they go and grab liquidity, and then once they have enough power, they go back to test the level. they go back to test this level, right? And when they get to this level, if the power they've gathered is enough, it's either going to bounce off it or it's going to break it. In the case of the bearish trend, the lower lows are being broken, right? So anytime lower lows are being broken, you know that you're in the bearish market. But then how do you know that the continuation is done? The correction is done. At this level, we can see that the market indicated that it wants to go low. It corrected itself. So this becomes the correction. This becomes the correction. And then once correction is being formed, you know that you're looking, especially if the correction doesn't break that high, then obviously you know that you're looking still at the bearish trend. If it breaks that high, then you're looking for another thing. Do you understand? If it breaks that high, it means you're looking for another thing, because remember, anytime a high or a low is being broken, then it's giving us an indication of what it wants to do. In this case, it didn't go above that high. It created another lower high. Guess what? Once it creates another lower high, you are looking for you to, get the continuation. So this one becomes the continuation, right? So that becomes the continuation. But then you're going to ask yourself, like we've been talking about, how do you enter this market then? The safest way to get into this market for a sell is that anytime the market gets below this level, you want to enter that trade and you put your stop loss above that previous low, that previous lower high, and then you target the next low. Or usually if you want to do it, you target like a 1 to 2 and then see how it plays out. But you're going to do all of this in the 15 minutes when it comes to the continuations and corrections and continuations. You're going to do that in a 15 minutes time frame. You're going to mark up your lines on the 1 hour or the 4 hour. But then when it comes to entering the trade, you're going to actually enter the market from the 15 minutes or the 5 minutes time frame. I explained that in the previous video. So if you go back to watch them, you'll be able to understand that. But I'm going to try and touch a little bit on it as well in this particular video. So guess what? Lower low was being formed. A lower high was formed. That low was broken, created a new lower low. So the minute a new lower low is formed, it indicates to us what the market wants to do, right? And then it corrects itself, goes to grab some orders, liquidity grab. It goes to grab some stuff, and then once it grabs the orders that it needs, as long as it doesn't go above that lower high and forms a new lower high, what happens is that you're going to wait for that market to come back under this level, right? The low that was broken, right? You want the market to come right after it. And once it gets to that level, you know that you want to put a sell over there and then put your stop loss right above that lower high and then target a 2:1 or 1:2. That's how the bearish correction happens. It's quite simple. It's not really difficult to understand. So what I'm going to do right now is I'm going to go into an actual market, and we're going to actually look at what the market looked like and see how we'll be able to, use this example. Videos that I'm going to make, I'm going to make some more entry videos so you'll be able to understand different ways of getting into the market, because the issue is that the correction, you don't trade it. You don't trade the indication. We only trade the continuation, right? You don't trade the indication. You don't trade the correction. You only trade the continuation. So let me put that here as well so you guys will note. When it comes to ICC, you do not trade indication and correction. You only trade continuation. That is the only one that you trade. But then how do you know that the correction has finished? Remember what I said in the bearish example, the correction is going to be a bullish trend, right? And then obviously, once the correction is completed, you're looking to enter the trade. Like the safe place to enter the trade will be from this level. But then if you really want to, if you don't really want to have a safe trade, then what you're going to do is you go on the lower time frames, 15 minutes or 5 minutes, and then once you know that lows are now being broken, then you know that the correction has been completed in the bearish trend, and then you can look for entries or possible entries from that point. But yeah, this is what it means for you to have a bearish correction when it comes to trading ICC. It's very simple. Let's go on an actual market, and let me see if I'll be able to see some examples that I can show to you guys. So let's go to the 4-hour time frame now. Okay, cool. All right, cool. I think we may be able to use this as an example. Okay, so when we come into this market right now, we're looking to find where our lows are, right? So this is a low. So we're gonna mark this one up to be our low. We're gonna mark this one up to be our low. And then this low came from that high, right? So this is a high as well. Remember what I said in the last video. Anything between the lows and the highs is a no trade zone, right? So anything in between is a no trade zone. You don't trade anything between the lows and the high. No trade zone. You don't trade anything in between these two lines, right? So what you're looking for is for either the high to be broken or the low to be broken. In this particular case, I'm glad we're looking for this. We're looking at this example because it will clearly explain certain things to you as well. The reason why patience is the name of the game. In this particular incident, right, or this particular example, the high, this was the low, and that was the high. The high was broken, right? It indicated that the market wants to go up, right? But remember what I said, we don't trade the indication, we only trade continuation. So it gave us the indication that the market wants to go up. But then when it gave us the indication that it wants to go up, this was supposed to be the correction, right? So the market was there, it gave us indication it wants to go up. So this was supposed to be the correction. And remember, the correction is not supposed to break there. This is an indication the market wants to go up, right? This is a correction, and then sorry, indication that the market wants to go up. What I said to you was that anytime a swing high or swing low is being broken, or when a high or low is being broken, that is telling you what the market wants to do. This was the high. The high got broken, right? And then obviously it indicated what the market wants to do. Now, if you were looking for corrections, you don't want that correction to break this low. But in this particular case, the correction broke the low. And remember what I said, anytime a high or a low is broken is an indication of what the market wants to do. So yes, it broke this high, but then the correction didn't actually end at this level. It also broke that low as well, meaning it gave us another indication that the market wants to go low now, right? So let's delete this one. So now we have another indication of what the market wants to do. We have an indication from this level, because that low has been broken. We have an indication that this market wants to go down, right? So the market came all the way down here from this level, came all the way because it broke this low, indicated that it wants to go low, right? So indication. And then it corrected itself, right? So remember what I said, the correction is always going to be is always going to be bullish, right? The correction is going to be bullish. It's going to be bullish. It's going to go up to correct or to grab some orders, right? And then when it corrected itself, then what happened? It continued all the way to this level. So that was the continuation. So you're going to ask me, so wait, how do you actually enter this market? So this is the 4-hour time frame, right? We are going to mark up our highs and our lows, and then we're going to look for that indication. So the minute the indication is completed, you go to your 15 minutes time frame. You move all the way to your 15 minutes time frame to see what's going on. So this is the markup that we did, right? We go to our 15 minutes time frame to see exactly what's happening. So that was our indication. It indicated to us what the market wants to do. Now you're looking for the market to correct itself, right? So when the market is correcting itself, remember what I said, it's going to be a bullish trend, right? It's going to go up. So you're looking for higher highs and higher lows being formed, right? So what happened on the 15 minutes time frame was that it was here, then it went all the way up there, it came there, and it came all over there, and it came back here, right? So the minute this low is broken, it gives you another indication that the market wants to go low, right? Because the low has been broken. If the high is broken, then it tells you that it wants to go up. But because the low has been broken, it means that the correction has finished or has been completed. Because I told you that anytime you're in the bearish market, the correction has to be a bullish trend. But because the low has been broken, meaning that lows are not being broken, it's only highs that are being broken. In this case, this low has been broken. So it's another indication on the 15 minutes time frame of what the market wants to do, right? And then what happened? If you see that, what you can do is you can literally just enter the market from this level, and then you go to the 1 hour time frame. And then what you're going to do is that you're going to look for the previous low, right? Or maybe what you can do, actually go to the 4 hour time frame. You can do it on the 1 hour time frame as well, but you can go into the 4 hour time frame, and then you can target a 1:2 and simply put your stop loss right above that low, and then you can see that it will actually play out for you to actually make that profit. So that's how it is. Really, it's very simple, not difficult to understand. You just have to watch this video a couple of times. And if you have any questions, if you join the Discord, I'll be able to explain them to you. I'm gonna try and do some lives as well. So I'll try and pick one of these days for us to do lives where we go through some of the trades that I do in a week. But yeah, for today, I hope you guys enjoy this video. I hope you go back to watch it several times to get the understanding that is needed. It's very simple, not difficult. You just have to watch it several times, and then once you're done with that, you're going to be good. So we spoke about the bullish continuation. I explained to you what that is. We spoke about the bullish continuation from last week, where you can enter the market, and today we've spoken about the bearish the bearish continuations. I said corrections from them. Sorry about that. Bearish continuations, and how you can actually use that to enter the market as well. Like I said, you're looking to get to the level where the low was broken. Remember, there are buyers at the top, there are sellers that are pushing the market down. So if it's selling, the minute the market breaks below that level where sellers are pushing the market down, you want to enter the market and target the highs, or the lows that are beneath that low, or maybe just easily go for a 1:2, trying to get that from the higher time frame. So yeah, I hope you enjoyed this video. Watch it several times. If you have any questions, drop them in the Discord and I'll be able to help you to answer them. Thank you.